Welcome to our deep dive on India's most anticipated IPO in nearly a decade, the National Stock Exchange, or NSE. After years of waiting due to regulatory hurdles, a record settlement and governance changes are finally paving the way for this landmark public offering. Let's break down the key developments. First, let's rewind to the reason for the delay. NSE filed its draft red herring prospectus back in 2016, aiming to sell a 22% stake. But in 2019, SEBI returned the filing due to allegations that some high speed traders had unfair access to NSE's co location servers, raising serious concerns about market fairness. In response, SEBI slapped an 11 billion rupee penalty on NSE and returned the IPO filing. After months of negotiations in June 2025, NSE proposed a record 13.88 billion rupee settlement, the largest ever with India's markets regulator to resolve the co-location issue and governance lapses. With this proposal, SEBI is expected to grant its no objection certificate within 3 months, allowing NSE to refile its DRHP by July 2025 and target an IPO in the fourth quarter of fiscal year 2026. Motilal Oswal Private Wealth anticipates SEBI clearance by the end of July, followed by a 4 to 5 month prep and a 2 to 3 month regulatory review. If all goes as planned, book building could kick off late this year with a listing on the Bombay Stock Exchange by December 2025 or early 2026. This aligns with conflict of interest rules requiring NSE to list on its main rival, BSE, similar to BSE's own listing in 2017. Next up, let's dive into the NSE's valuation and big plans. They're looking to sell a 10% stake, aiming to raise around 60,000 crore rupees with an impressive valuation of 6-lakh-crore rupees. This would surpass LIC's 21,000 crore IPO and Hyundai India's 28,870 crore debut, making it the largest issuance in India's history. In the grey market, unlisted NSE shares have surged by about 60%, trading at around 2,400 rupees, showcasing a strong investor interest as of today. So, who's set to benefit from this upcoming IPO? Major shareholders like LIC of India with 10.72%, State Bank of India at 7.76%, and both Morgan Stanley and Canada Pension Investment Board with about 1.6% each will be cashing in on their stakes. Meanwhile, 39 alternate investment funds and a 21.7% foreign direct investment stake are pushing for value unlocking. A successful IPO could bring in a whopping $6.7 billion haul in 2025, solidifying India's position as the largest IPO market outside the US this year. But remember, this IPO is not just about raising funds. SEBI has laid down governance reforms. NSE needs to secure its clearing corporation, revamp board appointments, improve transparency on management pay, and strengthen internal controls before they file the DRHP. SEBI Chairman Tuhin Kanta Pandey has given the green light and said there are no more policy objections. But the structural separation of NSE clearing is still on the table. Meanwhile, SEBI is deep into inspecting NSE's tech and audit processes. This is the last hurdle before they issue the formal NOC. Opening NSE equity to public ownership is a game changer. It democratizes one of the largest derivatives platforms, boosting transparency and the participation in our financial system. But let's not forget the risks. Global market volatility, possible judicial delays, and last-minute SEBI objections could push things back to early 2026. In summary, the NSE IPO is a blend of regulatory closure, strong demand, and governance reforms. If all goes well, by early 2026, you could own a piece of the exchange, an unprecedented milestone for Indian capital markets. If you enjoyed this video, don't forget to like, share, and subscribe. Your support means the world to us. Thanks for watching and have a fantastic day. This video is for educational and informational purposes only. It does not constitute or substitute for professional investment advice. Remember, always do your own research before making financial decisions. Consult with a qualified professional for personalized guidance. Any data, charts, or historical performance shown are not indicative of future performance. I am not a SEBI registered investment advisor/portfolio manager. I may hold positions in one or more of the securities discussed. Viewers should assume no conflict-free status unless explicitly stated. Under no circumstances, I shall be liable for any direct, indirect, incidental, or consequential losses arising from any use of this video or its contents. Stay informed, stay smart, and make wise choices.